I think actually in China, and I wouldn't disagree with the Nomura report, the key challenges on China are zero COVID, and that's really policy, and that's really affecting the consumer. And the consumer is a lot weaker than it was. Infrastructure, yes, incrementally there'll be more news from the government. I don't think it makes a big difference. It's not going to do the heavy lifting. And there needs to be some sort of short-term and medium-term view solution on the housing market to get the long-term growth rates right. So, economically, we've seen downgrade after downgrade. We've got a 3.3% GDP forecast. We could be lower if things don't move. We're actually not expecting zero COVID to go before the end of the year. We were expecting it to be loosened, but not gone. So that's going to be challenging for the economy. But stock markets are different. Stock markets run on different factors.
Yeah, but that's what I was getting at, because it's not just, I wasn't just talking about stimulus on the infrastructure front. I'm talking stimulus about backstopping the property market. I'm talking stimulus in terms of the LPR cuts. I'm talking stimulus when it comes to, if you were to see an ending of this zero COVID situation, it doesn't necessarily guarantee that you are going to see this huge upswing when it does come to demand at the same time, because it's been relatively fractured as opposed to it being a strict, harsh lockdown. And then you have this big buzz coming up on the back of it that we've seen in other jurisdictions. So is there a case to be made that there needs to be more support being handed out? And I know they're a little bit gun-shy because of what's been happening in the past, but they really should be thinking about juicing it up a little bit more to provide support for the broader economy and then thus equities?
Well, look, it seems like the government view is that, in the second half of the year, things will get better naturally because, COVID will get more under control. There'll be more looser restrictions and the economy will pick up. But I think they're misunderstanding that the consumer is really, really weak. So, yes, they need to do more to get that consumer confidence going. Look, we do not think that, by throwing a lot of money at it, they're going to do that and we're going to have a huge infrastructure boom. It's going to be all incremental. We don't think that COVID zero is going to go. So the one thing that can happen is a solution in the housing market that gets sentiment going, that gets the confidence of the consumer going, and that in turn means that the economy can do better. And I think that's what's dragging the market, is that ultimately the economy is in trouble. But the market's oversold. We had a huge rally in June against the US market. In July, we've almost given all of that back. And, we think the US market's probably overpriced at the moment, the next 5% down. The next move is 5% down over the next few months. We think that fundamentals have been not as good as have been reflected in the market. And in that way, China could outperform on a tactical basis at some stage if we get the policy support. But we think it's for the big structural call, go overweight China.
Right.